Hey, good morning, everybody. Today is Thursday, November 5th, 2015. My name is Cliff Backus, and this is your push-button StockTrading.com daily video market review. Stocks closed mildly lower on above average volume, but volume was less than Tuesday's level, avoiding another distribution day. For the second session in a row, the Nasdaq tested and failed at resistance in the 5164 area. New York Stock Exchange declining issues bettered advancers by about 3 to 2 yesterday. New highs bettered new lows. As they have every session since October 1st, large capitalization stocks outperform small and are outperforming on a 10-day moving average basis. Large caps outperforming is behavior less typical of a bull market. Our swing timing model is showing a short-term, extremely overbought condition in the market, so be careful. Longer term, our market timing model on both the Nasdaq and the S&P 500 remains on a buy signal, indicating that aggressive traders should maintain current margin levels and let their trailing stops take them out of their current positions. More conservative traders can redeploy capital on the long side, keeping stops in place. The O'Neill timing model is indicating a confirmed uptrend in the market. Distribution's a concern, but much of the distribution is aging and will begin to fall off our count next week. Distribution is no longer relevant after a month and is removed from our count. According to my count, the Nasdaq has 6 distribution days and the S&P 5 in the past month. Investors Business Daily, which keeps a more sophisticated count, has the distribution count at a much more bull-friendly 2 for the Nasdaq and 4 for the S&P. Distribution is a sign of institutional selling in the market, and too much distribution over a short period of time can indicate that an uptrend's in trouble. All of our timing models are bullish, but our swing timing model is indicating a short-term, extremely overbought condition in the market. While an extremely overbought market can get severely overbought, short-term caution is advised. That being the case, bulls may want to take advantage of any short-term weakness that develops to bolster long positions. We're now more than a month into the confirmed uptrend. Traders should be fully invested, or nearly so, keeping your stops in place and being sure to follow your written rule sets. Okay, let's take a quick look at our Spectrum Analyzer. What we're looking at is HGSI, High Growth Stock Investors' universe of over 8,000 stocks, sorted by a combination of the most powerful stocks and the most powerful industry groups. We've made a group of the top 100 stocks in that sort, so let's plug them into our Spectrum Analyzer and see where the strength in the market is. Yesterday, of the top 100 stocks in the market, 13 were semiconductors, 12 were application softwares, 7 were internet media, we had 7 biotech, and rounding out the top 5, we had 6 infrastructure software. We're seeing a lot of strength in semiconductor and application software. We're also seeing a lot of strength in biotech recently. These may be good places to look for stocks in this market. Again, I want to start today with a look at the Russell 2000 real quick. We've been watching this downtrend in the Russell 2000. While the S&P and the Nasdaq Composite have both turned more positive, the Russell 2000 has still been struggling with this downtrend and struggling with resistance down here in the 1194 area. I think the Russell 2000 again is the key to the longer term performance of the market. In order to see the market get wildly bullish, we need for the Russell 2000 to at least better this resistance in the 1194 area. You can see that over the past 2 days we've attempted to better that area but have failed. So we'll keep an eye on the Russell and see where it wants to take the rest of the market. Let's take a look at the Nasdaq Composite. Nasdaq yesterday was down 2.65 points or 0.5%. We closed at 51.42, and significantly, we again attempted to better resistance in the 51.64 area and failed. Obviously, before the Nasdaq can move to new highs, we need to take out this level of resistance. Trading volume yesterday was above average, but it was below the prior day. For you followers of William O'Neill, we are in a confirmed uptrend. We have been since October 2nd. By my count, the NASDAQ has 6 distribution days. By IBD's count, we don't count these 4 days, and so they have only 2 distribution days on the NASDAQ. NASDAQ right now is bracketed by support down here at this trend line. This trend line was established back in 2009 to August of this year. This is our support area. Resistance is up here in the 5164 range. Our market timing model is on a buy signal, which indicates that aggressive traders should maintain current margin levels and let their trailing stops take them out of current positions. More conservative traders can continue to redeploy capital on the long side, keeping your stops in place. Conservative traders should be about fully invested at this point. Let's take a look at what the S&P 500 is up to. The S&P yesterday was down 7.48 points, or 0.35%. We closed at 2102, holding that 2100 level, which I suppose is fairly significant. The S&P closed in the lower half of its daily trading range, which is a little bit more of a short-term bearish signal. Trading volume was about average for the day. It was below average daily. It was below the prior day. The NASDAQ right now, the S&P 500 right now, is on a confirmed uptrend with 5 distribution days in the past month. The S&P is bracketed by that same trend line that the NASDAQ has been bracketed by, and resistance up here in the 2134 area. So we have support at this trend line, and we have resistance up here in the 2134 area. The S&P 500 is on a buy signal on our market timing model. One of the things I screen for daily using HGSI, High Growth Stock Investors, are buyable gaps. Buyable gaps were first introduced by Gil Morales and Chris Ketcher in their book, How to Trade Like an O'Neill Disciple. The definition of a buyable gap is an opening gap of at least 3/4 of a stock's average true range on at least 150% of average daily volume. We had 3 very nice buyable gaps yesterday, and so I want to go through them really quickly. The first is Fleetmatics Group. Fleetmatics Group is an Ireland-based developer of web-based and mobile fleet management software for small and medium-sized businesses. The stock had put in this nice little cup and handle base that it broke out of at 52.29. It's a second stage base, and Fleetmatics gets a 64% checklist rating. Yesterday they reported earnings, and the stock gapped higher, gapping above its 21-day exponential moving average, which we show in pink, and its 10-day simple moving average, which we show in green. Stock traded well over 150% of average daily volume, and for very aggressive traders, this might be a good place to buy Fleetmatics. One note, you'll notice that Fleetmatics opened higher than it closed. I'd prefer to have seen it closed higher than it opened, but Fleetmatics might be a good trade for aggressive traders here. Paycom Software also reported earnings yesterday, and as a result had a really nice gap up. Paycom provides cloud-based human capital management software that manages employment life cycle for employers and employees. Paycom's been working on this third stage base. We actually broke out of that base back here in October and then failed, falling back into the base in the 41.58 area. Yesterday on earnings, the stock gapped well out of that area and closed significantly below where it opened. Fleetmatics is in a late stage base. Generally, we're not all that interested in third stage bases, but because Fleetmatics gets an 80% checklist rating, it may be a stock worth taking a look at by aggressive traders here. Just a note, a buyable gap is a very aggressive entry point, but buyable gaps frequently go on to make significant new highs. Last stock I want to take a look at, MaxLinear provides RF, analog, and mixed signal integrated circuits used in communication and video display over broadband networks. The stock had been working on this second stage base with a pivot point in the $13.33 area. We broke out of that base, but fell back into it right here. Yesterday, MaxLinear reported earnings. The stock gapped out on huge volume, opening down here, and it closed the day at the high for the day. Scary to buy MaxLinear here, but this is as nice a buyable gap as you're going to see. MaxLinear gets an 88% checklist rating. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohanneson Liqueurs Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohanneson Liqueurs Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohanneson Liqueurs, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohanneson Liqueurs Incorporated believes to be accurate. Ohanneson Liqueurs Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohanneson Liqueurs, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push Button Stock Trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.